how did markets behave when the Federal Reserve cut rates? There is a lot of data in here. You can take your time and look at market reactions across asset classes. It's fairly detailed. But there are three most important things that you must take away when you want to understand how markets behave to previous Federal Reserve rate cut cycles. Firstly, like we talked about earlier, all the most important Federal Reserve rate cuts in the recent past have been delivered just before recessions in the US. This time around, it does not look like the US is getting into a recession like we saw on the previous slide. Economic activity is at trend, and the economic activity trend appears to be increasing, indicated by the upward sloping OECD CLI. The second part is every single time in the last two key recessions that happened in the US, which was the reason why the Federal Reserve cut rates, three sectors have outperformed: staples, discretionary, and pharma, both in US and in India. And the third takeaway is, again, the last two times, US large caps appeared to show a growth bias that you can see here. You can see that S&P 500 growth stocks appeared to outperform the S&P during all these phases. So there is not really much to take away from market reaction. There are some nuances here and there, but the most important point is this data of market reaction to Federal Reserve rate cuts and sectoral analysis would be relevant only if you expect the US to go into a recession and the Federal Reserve's rate cuts next week to be read from that point of view. We don't see the US to get into a recession, and we also see the Federal Reserve's rate cuts to possibly be marginally positive on growth, and it is broadly seen as the Federal Reserve's attempt to bring growth back on, rather bring the labor market back to speed.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.